a pair that is coming into focus for me in 2026 after a record 2025, looking at what's next for the Mexican peso after its best year since the early 1990s, 1993, I believe. Let's get into it, because looking at this chart, much like we walked through on the best performing currencies of 2025, Mexican peso up there at 14% gain. And for the purpose of this discussion, we'll be looking at the US dollar Mexican peso exchange rate. So that means if we're looking at a chart and the chart goes down, that is US dollar weakness and Mexican peso strength. So that's how you interpret these currency pairs as they're quoted directly against each other. So this chart, a little bit of a fake out in the early months of the year, most notably that long wick candle in April, when we thought with Liberation Day that this 2025 could have played out very differently had President Trump stuck to a lot of those initial deadlines and tariff numbers in terms of percent taxed, but didn't end up being the case, and that quickly reversed. And into the end of the year, much like U.S. equities, we'll get into some correlations and some drivers of the peso, but pretty much strong and steady throughout the end of the year. And now we're looking like, if you were to try and call a bottom, at least momentum-wise, we're stalling a little bit to start the year. But I've got some interesting points to cover on the next slide of just why I think some of this peso strength in particular made it appreciate to a degree more than any of the majors, not as much as some of those, Norwegian kronar or Swedish krona, those krone variants, but still a notable gain. And it really is, an amalgam of factors, not necessarily one headline. We can point to that Tariff Day, Liberation Day, as perhaps a catalyst, but the resulting strength throughout the next 7 months was really just a low volatility environment. Mexico's rates higher than the U.S. We'll look at a graph that doesn't look like your typical graph for they were cutting rates in the Bank of Mexico or Banxico. But still, those rates remaining elevated and more stable than they could be. And stabilizing risk sentiment has sent, if we think about, I like to think about currencies on a curve of risk appetite. And the Mexican peso often is not only, one of the emerging market currencies, but really a proxy and a heavier liquidity pair for a lot of emerging market currencies, more so than just their idiosyncratic country risk itself. So the end of 2025 with, blowing through new all-time highs in U.S. equities and lower geopolitical tensions, even with, this recent Venezuelan development, it looks to be contained. Mexico starting to get involved verbally, but nothing substantial there. So kicking it over to the next slide, these conditions don't just exist in a vacuum. Policy expectations matter a ton for these currencies. And here we're looking at the U.S. overnight interest rate now down below 4%, and the Mexican overnight interest rate approaching 7%. But what matters most is the outlook and the expectations around this. And so even though Mexico cut very aggressively in 2025, all of these cuts were well telegraphed and gradual. And for emerging market currencies in particular, that matters a ton more than the actual rate itself. You can take a look at, the Turkish lira and Turkey battling hyperinflation and keeping rates ultra high, not a driver for their currency at all as it relates to, the main appeal of moving your money into a Mexican peso from a US dollar is to capitalize on carry trade dynamics. And what matters more than the headline rate itself is, the actual guarantee or, expectation of stability of your return there, that you won't have a ton of fluctuation and risk of currency depreciation. And so that was the main headline of 2025. U.S. overnight interest rates started to stabilize and lowered that volatility. As we continue in 2026, we're pricing in more rate cuts, and the Bank of Mexico is not. So we might see stabilization around that 7%, and we continue to tick lower into the 3% handle. And that's the main forward-looking driver for some of these exchange rates in particular, because we're factoring in, I think, 2 rate cuts throughout the year. If that starts to change dramatically to 1 or 0, then we might see a big rebound in U.S. dollar across the board, and here in particular, and then a lot of sensitivity on the Mexico side if there starts to be lower growth prospects and they need to start cutting their rates once again. That not necessarily priced in right now, and so this is a main driver fundamentally. But over on the next slide, we'll cover that risk is still, in my mind, the big gatekeeper here. U.S. dollar, Mexican peso, and volatility. Looking at the peso and VIX correlation over a rolling 12-month basis, very negative consistently, not to the magnitude that maybe you'd expect from looking at correlations in other asset classes, like, if I'm looking for a strong correlation, I want it to be 0.7, 0.8. But when we think about the VIX, and we all know how the VIX behaves, equity volatility, it's not linear at all, and it clusters. And so I'm not as concerned about the magnitude here, but the consistency does reveal, I think, a lot about how quickly this can change. And when volatility arrives in risk-off periods, this can be a big detriment to the Mexican peso and the peso's demand. And so when that risk regime flips, if it does, and we start to get a lot more chop from these all-time highs in the U.S. stock market, and maybe even if we get a major correction, we could expect a big flow back from pesos into U.S. dollar, and that move could be quicker than you expect, because on the next slide, we'll look at, and this is what was really interesting to me, looking at not only the move in 2025, but that it was a direct opposite of what happened in 2024, in which the U.S. dollar gained 20% on the Mexican peso. And so this graph looking, like a straight up and straight down, but zoomed out to a tune of 20% to 14% down move in a currency pair is remarkable. So what happened in 2024? I mean, we saw volatility rise, and not only does that, as a catalyst for flows back into U.S. dollar, in particular as a global safe haven, but here's where we start to see, much like the U.S. dollar, Japanese yen, but even maybe to a greater magnitude, we start to see carry unwinds, and a lot of these levered positions start to increase the magnitude of these moves and the consistency of it as there's a constant recalibration. And so this is all to say that, perhaps looking at 2025, looking at, the outlook fundamentally, a lot of the technicals too, if you draw however you really cut up lines on a chart right now, it's looking like favoring more peso strength, even though we're at some extremes. We do see the risk, and did a little analysis that on average up days in this pair do have a greater magnitude than down days. So if we see peso appreciating, it's more of a slow grind than flight to U.S. dollar strength can be a lot quicker. So I think that sets up, a really key thing to have in the back of your head as we move to the key takeaways. Just thinking about, not necessarily a prediction of where this pair will go, but a framework of how to think about it and to keep it in mind when you're looking at other asset classes and looking at, some stock volatility entering the picture. We could start to see a complete reversal in this pair. And now, since we've had such a rundown, a 14% down move, any tick higher, could to fill the range could have a great magnitude to it, or we could see, as a non-event, we could see this peso continue to grind lower